So here what you see on the screen is a daily chart that goes back to, a daily chart of spot gold that goes back to October of '08. See the trend line? Today we broke it. So someone emailed me today and asked why there was so much weakness in gold. And I think that probably it had more to do with the breaking of this trend line at 1175 than anything else. And so here's the issue right here. All right, so 1175 we break, we go down to an intraday low of 1157.75, and the 200-day, the sharply rising 200-day is at 1149 roughly, right here. And with that being the case, that's the first real important level of support, 1149. Right now, you keep this picture in mind, because what we have here since October of '08 is first leg up, pull back, higher high, pull back, higher low, another up leg, pull back. So if you're a strict technician using an intermediate term basis for your decision-making function in spot gold, which I'm not, because I got in too high to risk all this, and we'll look at the GLD in a minute. 1040, 1050 is a key level. If gold breaks this, then gold will probably go back to 900. And I guess it's possible, because today, if I had to ascribe some reasons for gold other than the trend line break, which is the one I choose to use, because I still think this is a roaring bull market that's having a correction. I guess you could say, number one, on the fundamental list, someone's liquidating gold. Now maybe, Jim Paulson is liquidating gold. I mean, he's been in the press for months because he's been accumulating gold. Maybe he's liquidating gold to get into stocks. I don't know. With stocks going up, in a chart like this, you can understand people have profits. So where are they going to take the money from in order to buy stocks if they think stocks are taking off in a sustainable run like we had from March of '09 to April 2010? They would take it out of this market because there aren't too many other places to take it from. And I guess they could take it out of the bond market too. So the other reason besides a liquidating market is deflation. Supposing gold goes down another $100 an ounce to 1050, what then? By that time, I assure you, not only will the technicals be screaming buy, the deflationists will be out in force. It's a little hard for me to throw the bonds under the bus if gold is going to tank, and people will start to talk about deflation. So I am less concerned with the bond market for that reason than I am with the gold market. Now gold, I have a stop, under 112 and change. And if I change this to a GLD, just so you can see the comparison. All right, so the GLD, you close at 113.50 off a low of 113.21, and the 200-day moving average is 112.06, and the area of that 1050 area is 105 to 104. Now, if I get stopped out here, it could turn around. I'll get back in, or it'll continue lower, and if it goes down to 105, I'll be looking at it to get long again. If I put a relative strength on this, you see that it's pointed straight down, which leads me to believe it will test the average, and I want to stay in it for that test. And if I get some sort of reversal from there, then I'm good to go. If I don't, and it can't seem to rally off of the average, then I'm going to stand aside, let it go down another $5, and I'll see what it looks like down at 104 or 105, where it is the next area for it to hold logically. If it breaks this prior low, which was in February at 102.28, and I think we're looking at somewhere in here, 93 or $930 an ounce. So gold's very tricky here. We'll see what it does tomorrow. I would think that tomorrow we'll get some sort of bounce. Right now in the aftermarket, it's up $1.55. I mean, after it got hit so much, $1.55 isn't telling us much. And given the dollar has been relatively weak of late, gold is definitely a liquidating market, and people are using the money to do something else with it until they realize, I think, that what they're planning to do with it isn't much better than leaving it in gold.